This is Nightly Business Report with Tyler Matheson and Sue Herrera.
The clock is ticking. The threat of a government shutdown is rising, and that could throw the market for a loop. Making the cut, Amazon picks 20 finalists for its second headquarters. But as cities court the e-commerce giant, what's really in it for them? Economics of the flu. The virus is widespread across the country, and the costs are rising. Those stories and more tonight on Nightly Business Report for Thursday, January 18th. Good evening, everyone. I'm Sue Herrera. Tyler Matheson is off tonight. Wall Street's focus is once again on Washington. The deadline to fund the government is tomorrow at midnight, and lawmakers appear to be far from a deal. If an agreement isn't reached and a spending bill isn't passed, the government could shut down. The president today said that is a real possibility.
If the country shuts down, which could very well be, the budget should be handled a lot differently than it's been handled over the last long period of time, many years.
That kept a lid on stock prices. The Dow Jones Industrial Average dropped 97 points to 26,017. The Nasdaq was off 2, and the S&P 500 fell 4.5. So what could happen to the market if a shutdown is not averted? Bob Pisani takes a look.
Stocks have been off to the races so far in 2018, but the looming threat of a possible government shutdown could throw the rally for a loop. We've already seen the markets lose a little steam today, though remember, the Dow just closed fractionally lower. What exactly does a shutdown really entail? The government would stop spending, and it mostly applies, though, to discretionary spending. So entitlements, for example, Medicaid, and debt payments would not be affected at all, and neither would military spending. It's really very limited. The U.S. government has shut down a total of 12 times since 1981. The S&P 500 has traded down an average of 0.6% during a shutdown. That's not much, and it's a coin toss whether they go positive or negative the week after. So any impact on the economy would likely be modest. For example, Goldman Sachs estimates that each week of a shutdown would reduce first quarter GDP growth by 0.2%. But that would be reversed in the next quarter. So most of the notable shutdowns over the last few decades have coincided with debt limit deadlines. Now that's more serious. The next debt limit deadline won't be here until March, so stocks likely won't react much to a shutdown, but if the debt ceiling drama heats up, that could become a problem for the markets. The main concern is the bond market. The yield on the 10-year Treasury note hit a 10-month high today, and the shorter term, the 2-year yield, rose to levels not seen in a decade. So if rates continue to rise, that could give the stock market a bit of a pause. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So as an investor, what should you do to prepare for a potential shutdown? Here to talk about that is Ed Mills, Washington policy analyst at Raymond James. Welcome back, Ed. It's always nice to have you here. First of all, handicap it for me. What odds would you put on a government shutdown?
We might shut down, but we probably don't. I think at this point, it looks like we're not going to get the long-term deal that we were hoping to do. We're probably not going to get the month-long deal that was on the table that started the day. It looks like we're probably headed towards a very short-term extension of 5 days or less, forcing folks back to the negotiating table and seeing if we can work through the weekend and get that long-term deal hammered out.
One of the worries from other analysts and economists that I've talked about is the fact that the immigration debate is integral to this deal, and that's a very emotional debate and a very passionate, depending on whatever side you're on, and that may be a bigger sticking point than times past.
Yeah, and I think for the DACA debate, the immigration debate, the person who needs to be convinced here is probably the president. If the DACA fix that kind of was negotiated on a bipartisan basis in the Senate was on the Senate floor, it would pass. It was on the House floor, it would pass. What we're doing right now is more through a partisan approach in the House, where Speaker Ryan is trying to do it on Republican votes alone. To get a DACA deal, you need to abandon some of the more right-wing kind of conservative part of the party to get Democrats on board. It is ultimately the middle that is going to deliver a DACA deal and a long-term fiscal solution in getting the government kept open.
You know, the last couple of days for the market have seen some increased volatility, and the worry from some that I've talked to is the fact fact that we have a market that has moved so far, so fast. I mean, we went 1,000 points in a record amount of time, that any glitch will increase market volatility. Do you agree or not?
It's possible, but I think this is more of a buy the dip scenario if the kind of government shutdown causes any market volatility. What is really much more important here continues to be the tax bill that just got passed. We're about a week into earnings seasons. These companies are still providing guidance on what the impact is going to be. I think that's where the market has more legs from here. And ultimately, the government shutdown is absolutely going to get resolved. So we look back a month from now, 2 months from now, this is going to be a very temporary problem on very specific issues, not really endemic of a larger economic situation. And ultimately, when we do get a government funding bill, the spending caps that were going to go back into place in 2018 are going to get lifted. So this is actually more fiscal stimulus to the economy in addition to what we got in the tax bill.
Thank you so much for your perspective, Ed. We always appreciate it.
Thank you.
Ed Mills with Raymond James. Well, on the corporate side of things, IBM investors have waited an awfully long time to see revenue growth, and tonight they got it. Big Blue's quarterly revenue rose for the first time in nearly 6 years, largely due to the company's focus on the cloud and also security services. IBM's earnings beat analyst estimates by a penny, coming in at $5.18 a share. Revenue rose 4% from a year ago to $22.5 billion. But investors were wary, sending shares initially lower in after-hours trading. Deirdre Bosa has more on IBM's quarter.
IBM finally breaking its years-long streak of declining sales and fueling more optimism for a turnaround. It's expecting revenue growth for all of next year, perhaps alleviating some concerns that this was a one-time lift and not the big turnaround that CEO Ginni Rometty has been working on for nearly 7 years now. Still, IBM is a long ways from where it was even 6 years ago when its stock was above $200 and it was the most influential stock in the Dow Industrials Index. Today, shares are nearly 20% off that price, and it's only the 8th most influential Dow stock. Meanwhile, Big Blue is making a big bet on next generation technologies like artificial intelligence, cloud computing, and big data, which makes up its strategic imperatives unit. And while this unit's share of total sales is growing, that growth has been choppy, and it's still uncertain whether it can make up for IBM's slowing legacy business. So the big takeaway here, IBM is growing again, but the jury is still out on whether it'll last. For Nightly Business Report, I'm Deirdre Bosa, San Francisco.
OPEC is concerned about a flood of new oil from the U.S. The cartel increased its forecast for supply growth for the second straight month. Over the past 2 years, OPEC has cut production, and that has helped ease the glut. It has also caused prices to move higher, which in turn made it more attractive for some producers to bring more supply to the market, especially U.S. producers. So the price of domestic crude today settled just slightly lower. Home building activity fell sharply in December. Housing starts recorded their biggest drop in just over a year, with a steep decline in construction of single-family homes. Some economists say extremely cold weather at the end of the month could have disrupted building activity. A separate economic report on the labor market shows that the number of Americans filing unemployment benefits fell 41,000, more than expected last week, to the lowest level in 45 years. China's economy appears to be strong. A new government report shows the pace of growth accelerated last month. Eunice Yoon takes a look at the world's second largest economy.
China's economy ended the year on a positive note, 6.8% for the fourth quarter, 6.9% for the full year. And the December data also told the story. Retail sales were a little bit softer, but industrial output picked up, as did fixed asset investment. Now, what was behind all the growth was a global economic recovery. Shipments to the U.S. as well as to Europe held up well, as did household consumption. Now, in 2018, there's near universal agreement that the economy is going to slow down, and that's because Beijing authorities have not only been tightening credit, but also curbing pollution as well as the property sector. There is also one other risk for 2018, and that is the potential for a trade war. I'm currently at a car parts company in Beijing that sells to the United States. And I was speaking to the chairman, who said that he's been concerned about some of the rhetoric out of the White House.
We are very concerned about how Trump's policy will influence our future development in America. From an entrepreneur's perspective, we hope for a more open policy that would benefit all enterprises, including American ones. If there were a more open environment, American companies would be able to choose better suppliers and gain greater benefits.
China's trade surplus last year with the U.S. only got bigger, and there's some here who are concerned that the strength that we're seeing in the Chinese export sector could just feed into criticism by the Trump administration. For Nightly Business Report, I'm Eunice Yoon in Beijing.
And then there were 20. Amazon has narrowed the list of potential sites for its second headquarters to 20 locations. The company says that the finalists will work with Amazon over the coming months to, quote, evaluate the feasibility of a future partnership, end quote. Scott Cohn is covering the story for us from Mountain View, California. Great to see you, Scott, as always. So
Hi, Sue.
What happens next for these 20 cities?
Well, as you said, they're going to start talking to Amazon about a lot of specifics. The conventional wisdom in economic development circles, although nothing about this has been conventional thus far, is that the talks will get a lot quieter. There will be a lot more sort of confidential back and forth. But these cities are now going to be bidding against the best of the best for Amazon's HQ2 project, and they're going to have to decide whether to continue with this, whether to up that ante, or whether to cut and run. Meantime, for all of these cities, they've got some bragging rights now. If you didn't think of, for example, Columbus, Ohio as one of the most competitive cities in America, well, now you probably should. They're in that conversation. These cities all have some bragging rights no matter what happens in the end.
Yeah, it's going to be fascinating to watch this whole thing. Is there an element, though, perhaps of be careful what you wish for? Because in this very competitive race, some of these cities are ponying up huge incentives.
Right, and that's where the bidding war comes in. They're going to have to decide whether it's worth it to them and to their taxpayers to bring in this $5 billion project, and at what point they need to say it's fine just to be in the consideration. So there's that, and also the ultimate winner is going to look at some of the things that Seattle has had to look at with Amazon's original headquarters there. That includes rising housing prices, all kinds of things that come with major growth and growing pains. And so there is an element of be careful what you wish for.
You know, I was struck by how diverse this list is. You know, you have some cities that are much smaller, a little bit more rural, perhaps, and then you have Los Angeles and New York and cities like that. What does it tell us about what Amazon is thinking, what they are ultimately going to be looking for?
Well, I think it tells us that they meant what they said when they were talking about wanting a big metropolitan area. Yes, some are smaller than others, but everyone's more than 1 million people. There were some cities that tried to get in on this. Anchorage, Alaska, Hickory, North Carolina, they're out. Amazon wants a critical mass of workforce that it can draw from. It also tells us that the appeals to sentimentality didn't work. So Detroit, wanting to get Amazon in on the rebuilding of a once great American city. Amazon doesn't seem to want much part of a rebuilding effort. Tucson, Arizona, that sent them a giant cactus. They're just out a giant cactus. They're out of the competition.
On that note, Scott, thanks so much. We'll be talking to you again soon. Scott Cohn in Mountain View. Still ahead, this flu season is bad, and it is getting very costly. Four not-for-profit hospital systems are teaming up to create a new generic drug company. The hospital groups include Intermountain Healthcare, Ascension, SSM Health, and Trinity Health. Together, they own 10% of hospitals across the country. According to the New York Times, the move appears to be the first on this scale and is being driven by drug shortages and high prices. Executives are not disclosing which drugs they will make, and the new company could rely on third-party manufacturers. Regulatory approvals are still needed, but that story was enough to pressure shares of some of the major generic drug makers in today's trading session. Every year, the flu is responsible for thousands of deaths and billions of dollars in lost worker productivity. This season is shaping up to be one of the worst we have seen in years. And new estimates say it could cost employers $9 billion, $2 billion more than the average. Here to discuss the flu's potential economic impact is Assistant Professor of Public Administration at California State University, Dominguez Hills, Flynn Wynn Prager. Nice to have you here, Professor. Welcome.
Great to be here. Thank you.
You know, it's fascinating because you've done a lot of research on this particular economic impact of the flu. First of all, tell me what you're seeing so far, because it seems to be a worse than expected flu season.
The current data suggests that it's a worse than normal season, although it's still very early days and we don't have the best data from CDC yet to fully understand this phenomenon.
So what do you use when you're putting together your model? What are the key factors that you use to kind of indicate what the economic impact is going to be?
Well, the first two factors that we look at are worker productivity in terms of reduced workforce participation, and the second is medical expenditures, and both of those are important in regular flu seasons. One thing that our study looked at in addition is behavioral responses. So by that, we mean the ways in which people change their regular daily routine, whether that's pulling their kids out of school because of fear of infection, not attending work because of fear of infection, caring for their families who have been infected.
Are those costs offset by other things that people do?
They can very much be. So we have a concept of economic resilience, which is the ability to bounce back. There's also obviously vaccination programs which can have a significant impact in reducing the costs of an infection outbreak.
All right, we'll leave it there. Professor, thank you so much.
Thank you.
Professor Prager is with the California State University Dominguez Hills system. Some Wells Fargo customers were double charged, and that glitch affected those who were doing online bill transactions. The technical glitch reportedly left some with no money in their accounts and resulted in overdraft protection fees for others. In a tweet this morning, Wells Fargo said the issue had been fixed. American Express suspends its buyback program for the next 6 months, and it posted its first quarterly loss in 26 years after taking a charge related to the new tax law. Excluding that charge, the company turned a profit and beat expectations. Revenue was also better. Investors showed their disappointment in initial after-hours trading. Kate Rogers takes a closer look at this Dow Components results.
American Express reporting a strong quarter with beats on the top and bottom lines, but also announcing plans to suspend its share buyback program. The credit card company cited additional charges incurred from the Tax Act for the move, saying it would suspend that program for the first half of 2018 in order to rebuild its capital. The Tax Act triggered an upfront charge of $2.6 billion that reduced Amex's capital ratios. American Express estimated its tax rate would come to about 22% before discrete tax items under the new law, adding it as, quote, a positive development for both the U.S. economy and American Express. The company also said it would invest $200 million more towards customer growth initiatives in 2018 than it had originally anticipated, and it made an incremental contribution toward employee profit-sharing plans, but did not disclose the amount. For Nightly Business Report, I'm Kate Rogers.
Hotel operator Wyndham adds La Quinta to its portfolio, and that's where we begin tonight's market focus. Wyndham signed a deal to buy La Quinta's hotel management business for about $2 billion, adding nearly 1,000 new locations. Wyndham operates brands Days Inn, Ramada, and Super 8. Shares of Wyndham jumped nearly 5% to $122.73. Shares of La Quinta rose as well, more than 3% to $20.18. Morgan Stanley reported better than expected profit and revenue as strong sales in its wealth management business helped its results. The company said that strength helped offset a drop in commodities and also fixed income trading. Shares were up nearly 1% to $55.84. The new tax law helped Bank of New York Mellon post earnings that were in line with estimates. The bank disappointed on revenue, but said that it would raise the wages for about 1,000 employees. The company also said the majority of its gains from the corporate tax cut would be reinvested back into its business. Shares were off 4% to $55.35. And higher revenue at M&T Bank helped overall profit exceed expectations. The bank also said it would hike the starting pay for its workers as a result of tax reform. Shares of M&T Bank rose more than 3% to $186.15. Cities across the country are spending a lot of money to deal with the growing homeless population. The city of San Diego last year approved a bond measure to provide $1.2 billion to build permanent housing during the next decade. A sales tax increase was approved to generate $3.5 billion for rent subsidies and services. Now that amount surpasses the roughly $2.5 billion investment that New York City has pledged to help the homeless. And today, the mayor of New York put part of a controversial plan to work. Contessa Brewer is in Manhattan tonight.
Big news on Billionaires Row, where New York City's mayor plans to open a homeless shelter just steps from a building where the penthouse apartment sold for $100 million. The budget-conscious Park Savoy Hotel will soon house 150 homeless men as a shelter, next door and across the street from, well, shall we call them budget-unconscious hotels, luxury hotels? The 157 building is one of the most expensive condo properties in the city, but its back entrance will open up just a couple doors down from the shelters. Carnegie Hall and Central Park are right there. A resident who lives across the street says it is an ill-conceived notion to place a homeless shelter in proximity to some of the most expensive real estate in the city and just steps away from Carnegie Hall. This will certainly diminish property values and impact tourism in this vibrant area. A local realtor points out some property here sells for $10,000 per square foot and questions whether it's the most efficient use of taxpayer dollars to address homelessness. But New York Mayor Bill de Blasio plans to open 90 new shelters citywide. Every neighborhood, he says, has a homeless problem, and every neighborhood should host a shelter, no matter the impact on property values or tax revenue. In fact, the mayor's office told me those aren't even considerations. In New York City, for Nightly Business Report, I'm Contessa Brewer.
Coming up, Bitcoin and blackmail, and a warning about a brand new scam. Apparently, not as many people went to the movies last year. Attendance in the U.S. and in Canada fell more than expected. According to the National Association of Theater Owners, the number of tickets sold was 6% lower than the prior year, to about $1.25 billion. The association blames the downturn on a weak summer movie season. The average ticket price also hit a record high, in part because of the large number of films in 3D and also those large format screens like the IMAX theaters. Well, imagine you get a letter sent to your home threatening to reveal a secret unless you pay up. These blackmail letters are a growing scheme, with more letters being received just this month. Andrea Day reports on the new way that con artists are trying to get your money.
I know that you have been cheating on your wife.
Chilling words in a letter sent to Dave Ergel's home, and there was more. It is just your bad luck that I stumbled across your misadventures while working a job. If you want me to destroy the evidence and leave you alone forever, then send $2,000 in Bitcoin. A blackmail letter claiming to have secret information about Ergel's infidelity and demanding payment in Bitcoin.
And I had to think for a second, because I was in a bit of a fluster, am I actually keeping a secret from my wife?
The father of 3, happily married and faithful. But still,
it was fear, even though I had nothing to hide.
So he reached out to local cops and posted the letter on his blog.
Suddenly it jumped up to 200 a day, 300 a day.
The relatively unknown blog lighting up with traffic. And months later, when another wave of letters went out,
and then 500 per day.
He says he was flooded with emails, men from all over the U.S. who seem to have one thing in common.
He's been targeting affluent neighborhoods, and he's targeted a lot of lawyers. They're concerned about losing their social status if this attacker sends out information to their friends.
And for some, trouble already started.
Their wives got the letter first and opened the letter and then confronted them when they got home from work.
And another?
He said, I live in a golf course neighborhood. If the attacker sent out something to everyone in my neighborhood, even though I've been faithful, my reputation would be wrecked.
Should you send money?
No, absolutely not.
FBI Supervisory Special Agent Patrick Wyman.
They're hoping that they might get lucky with someone who actually has maybe been unfaithful. There's some infidelity there. And if they hit that target, that's a person who's probably willing to pay.
The letter, he says, just one criminal extortion plot using cryptocurrencies the FBI is watching closely.
The idea behind virtual currency is that it hides behind this veil of secrecy, that just because it's letters and numbers in terms of an account number and there's no personal information associated with it, that law enforcement won't be able to track it. They'll even go through the process of explaining how do you go about purchasing Bitcoin.
And he says cryptocurrencies do make it more difficult for law enforcement to track, but it's not impossible. Local police departments across the country have been issuing warnings about this Bitcoin scam letter. If you do get a letter in the mail, the best advice is don't pay. Just alert the authorities. For Nightly Business Report, I'm Andrea Day.
And before we go, here's another look at the day on Wall Street. The threat of a shutdown kept a lid on stock prices today. When all was said and done, the Dow dropped 97 points, the Nasdaq was off 2, and the S&P 500 fell 4.5. Two Dow stocks could pressure the Dow index tomorrow. Shares of IBM fell in after-hours trading despite reporting growth in revenue for the first time in nearly 6 years. And American Express also traded lower in late trading after reporting its quarterly results. So we'll keep our eye on those for you. That does it for us tonight. I'm Sue Herrera. Thanks for joining us. We'll see you again tomorrow.